In a striking turn of events, the Japanese cryptocurrency landscape is experiencing a meteoric rise largely attributed to the shifting political climate in the United States. With Bitcoin demand surging in Japan, one Hotelier's pivot to cryptocurrency has yielded remarkable returns for investors, underscoring the intertwined fates of digital currencies and global economies. Shares of Metaplanet Inc. have skyrocketed approximately 4,800% over the past year, marking the highest gain among Japanese equities and positioning it as a notable player on the global stage. This surge aligns with Bitcoin's recent ascent to an all-time high of $109,241 on January 20, coinciding with the inauguration of U.S. President Donald Trump. Although Bitcoin has since receded from that peak, the initial rally reflects growing investor confidence, particularly in a pro-crypto regulatory environment fostered by Trump's administration. Metaplanet, previously known as Red Planet Japan Inc., was initially a hotel development firm. However, following a pandemic-induced downturn that forced the closure of most of its properties, CEO Simon Gerovich transitioned the company to a Bitcoin-first strategy in early 2024. Inspired by the approach of Michael Saylor's MicroStrategy, which has amassed over $45 billion in Bitcoin, Metaplanet has attracted nearly 50,000 shareholders, a 500% increase in just 1 year. Most of these investors are retail participants, many of whom lack extensive experience in the volatile world of cryptocurrencies. Metaplanet has such high exposure to the volatile retail base, cautioned Rhiannon Ewart-White, a Japan equity analyst. They need to ensure shareholders understand exactly what their strategy is. The company's recent financial results, which reported an operating profit of 350 million yen ($2.3 million) after 6 consecutive years of losses, are likely to further buoy investor sentiment. Gerovich, who attended Trump's inauguration, emphasized the excitement surrounding a more favorable regulatory landscape for Bitcoin in the U.S., noting it has significantly boosted demand in Japan. This sentiment reflects a broader trend where institutional investors, including university endowments and foundations, are increasingly entering the cryptocurrency market, fearing they might miss out on potential gains. For instance, the University of Austin is launching a $5 million Bitcoin fund, while the Rockefeller Foundation is considering expanding its cryptocurrency investments. This institutional interest arrives amidst a backdrop of regulatory uncertainty, traditionally a deterrent for businesses contemplating Bitcoin adoption. However, the promise of clearer accounting rules and a shift in regulatory focus under the Trump administration is instilling greater confidence in corporate executives navigating the complexities of cryptocurrency financial reporting and compliance. Meanwhile, there are concerns about the broader implications of increased cryptocurrency engagement. As more Americans, especially inexperienced investors, enter the market, analysts warn that the next significant downturn could have far-reaching effects, potentially rippling through the economy. This concern is further exacerbated by the rise in illicit cryptocurrency activity, with TRM Labs reporting that the Tron network accounted for over $26 billion in illicit transactions in 2024. Efforts are underway to combat such misuse, including collaborative initiatives between TRM Labs, Tron, and Tether aimed at curbing bad actors. As the cryptocurrency landscape continues to evolve, the interplay between market dynamics, regulatory frameworks, and investor sentiment will shape the future of digital currencies. With the potential for Bitcoin to become more ingrained in mainstream finance, stakeholders are keenly observing how these developments will unfold, particularly in light of the significant financial and regulatory changes heralded by the latest political shifts in the U.S. The coming months will be crucial for both the cryptocurrency market and the broader economic landscape. As stakeholders navigate the opportunities and risks inherent in this rapidly changing environment. As the cryptocurrency market continues to fluctuate, recent developments have reignited interest in Bitcoin, particularly in light of political shifts and corporate strategies. Notably, Bitcoin's price has shown resilience, holding significant support levels that keep bullish momentum intact despite ongoing volatility and external pressures. On February 10, 2025, Bitcoin's price was seen stabilizing after a brief retreat from its record high of $109,241 reached on January 20 shortly after Donald Trump assumed office for a second term. This surge was largely attributed to Trump's pro-cryptocurrency stance, which has bolstered investor confidence. However, the market faced headwinds as Trump's latest tariff threats have stirred uncertainty impacting both Bitcoin and Ethereum. Analysts are closely monitoring how these political maneuvers will shape market dynamics in the coming days. In Japan, the influence of Trump's policies is palpable, particularly regarding the impressive 4,800% stock surge of Metaplanet Inc., a company that has pivoted towards a Bitcoin-first strategy. Once a traditional hotel developer, Metaplanet transformed its business model after a pandemic-induced slowdown inspired by the success of Michael Saylor's MicroStrategy. As a result, the company's shares skyrocketed, attracting nearly 50,000 shareholders, many of whom are inexperienced retail investors. Simon Gerovich, Metaplanet's CEO, emphasized that the excitement surrounding a more favorable regulatory environment in the U.S. has significantly increased Bitcoin demand in Japan. The excitement around a more Bitcoin-friendly regulatory environment has catapulted demand in Japan for the token, Gerovich noted. Despite its past struggles, Metaplanet reported a 350 million yen $2.3 million operating profit for the year ending December 2024, marking a significant turnaround after 6 consecutive years of losses. This financial rebound is likely to further elevate the company's stock price, with analysts urging the management to ensure that their retail investors fully understand the volatile nature of cryptocurrency investments. The broader crypto landscape remains uncertain, as highlighted by the recent performance of XRP, which has seen declines while Bitcoin remains buoyant. As political developments unfold, the implications for cryptocurrency prices remain a hot topic among investors and analysts alike. As the market braces for potential shifts, the interplay between regulatory changes, corporate strategies, and market sentiment will be crucial in determining the future trajectory of Bitcoin and the broader cryptocurrency ecosystem. With the ongoing evolution of the crypto landscape, stakeholders are keenly watching for how upcoming policies and market responses will shape the next chapter in digital currency investment. In an extraordinary turn of events, the recent launch of a cryptocurrency associated with former President Donald Trump has ignited a whirlwind of financial activity, revealing both the potential for quick profits and the stark risks of speculative trading in the crypto market. Just days before his inauguration, Trump announced the creation of a new cryptocurrency dubbed Dollar Trump, which quickly became a focal point for traders looking to capitalize on the coin's initial hype. The cryptocurrency made its debut at an opening price of 18 cents. In an astonishing display of volatility, it soared to a staggering $75 per token within 48 hours. This meteoric rise was not without its pitfalls. While some traders reaped substantial rewards, one early investor reportedly netting as much as $109 million, more than 810,000 wallets have collectively suffered losses exceeding $2 billion as the price plummeted back to around $17 in subsequent trading days, according to data from the forensic firm Chainalysis. The dynamics of the Dollar Trump launch have drawn scrutiny from financial regulators and analysts alike, raising concerns about the ethical implications of promoting such speculative assets. Experts have noted that the strategy behind memecoins often involves a classic pump and dump scheme, where early adopters buy heavily, inflate the price, and then sell off their holdings, leaving later investors to absorb the losses. The president is participating in shady crypto schemes that harm investors, while at the same time appointing financial regulators who will roll back protections for victims, said Corey Freyer, a former crypto advisor to the Securities and Exchange Commission (SEC). The Trump family's involvement in this venture has not gone unnoticed. Nearly $100 million in trading fees has reportedly flowed to them since the launch. The convergence of political influence and financial speculation has sparked a broader conversation about the risks associated with cryptocurrencies, especially given Trump's recent push to deregulate the industry. Critics argue that by promoting his own cryptocurrency during a time of regulatory uncertainty, Trump is leveraging his political clout to benefit financially, potentially at the expense of ordinary investors. Among those who invested in Trump were many of Trump's ardent supporters like Sean M. Whitson, a small business owner who expressed initial optimism about the coin but later lamented his losses, declaring that coin is a joke. Such sentiments reflect a growing disillusionment among retail investors who often find themselves on the losing side of speculative ventures. The Trump coin's launch is not an isolated incident. It is part of a larger trend where major public figures including Trump have increasingly embraced cryptocurrencies. Trump's foray into this space aligns with his broader financial ambitions, including the establishment of a company called World Liberty Financial, which offers digital currency investment opportunities. Furthermore, Trump's media firm announced its plans to venture into financial services, indicating a potential future where political figures may continue to intertwine their brands with the volatile world of cryptocurrencies. As the crypto market grapples with this latest development, the future of Trump and similar tokens remains uncertain. With regulatory scrutiny likely to intensify and an increasing number of investors left to face significant losses, the situation serves as a cautionary tale about the speculative nature of cryptocurrencies. As the landscape evolves, many will be watching closely to see how the intersections of politics, finance, and technology continue to shape the crypto industry in the years to come. In recent days, the cryptocurrency market has faced significant turbulence, primarily driven by geopolitical tensions and record short positions, particularly affecting Ethereum. The catalyst for this volatility was former President Donald Trump's renewed threats regarding tariffs, which sent shockwaves through the digital asset landscape. As Bitcoin and Ethereum grapple with these pressures, traders and investors alike are keenly observing the unfolding situation. On February 2, President Trump announced potential tariffs that seemed to trigger a significant sell-off in the crypto markets, leading to a staggering loss of over $1 trillion across various digital assets in just a matter of hours. This sudden downturn was reminiscent of the infamous flash crash in stocks back in 2010, as noted by analysts. It felt almost like the flash crash seen in stocks in 2010, but with no headlines, one analyst commented, highlighting the abruptness of the market reaction. Bitcoin, however, has shown resilience, managing to rebound and currently trading well above $100,000 after a remarkable 100% increase since the beginning of 2024. In stark contrast, Ethereum's performance has been lackluster, with its price hovering around $2,500, approximately 45% lower than its all-time high recorded in November 2021. The disparity in performance between Bitcoin and Ethereum has widened, with Bitcoin's market capitalization now 6 times larger than Ethereum's, a dominance not observed since 2020. This shift in market dynamics raises concerns about Ethereum's future stability, particularly as it contends with a historic level of short selling. The surge in short positions on Ethereum has been staggering, with hedge funds increasing their bearish bets by 500% since last November. Recent reports indicate that short positions have reached an all-time high of 11,341 contracts on the Chicago Mercantile Exchange (CME), which analysts believe is a troubling sign for Ethereum's prospects. According to the Kobayashi letter, there is a clear correlation between large short interests and subsequent price crashes in Ethereum's history, which amplifies the current anxieties surrounding the asset. Despite the overwhelming short seller sentiment, there was a brief respite as Eric Trump, the son of the former president, suggested that it was a good time to invest in Ethereum, momentarily boosting its price. However, the prevailing trend of short selling indicates that many investors remain skeptical about Ethereum's immediate future. Compounding these issues are broader market dynamics, including regulatory uncertainty and macroeconomic challenges. As the Japanese Financial Services Agency moves towards regulating crypto assets similarly to securities, the landscape for digital currencies is becoming increasingly complex. Such regulatory actions could further weigh on Ethereum, particularly as it struggles to establish itself amid rising competition and shifting investor sentiment. Looking ahead, the potential for a price recovery remains contingent upon both the resolution of external pressures and the performance of the underlying technology that supports Ethereum. Should positive developments arise, the sheer scale of the current short position could lead to a significant short squeeze, potentially reversing the current downward trend. However, until then, Ethereum finds itself at a critical juncture, battling both market skepticism and external economic pressures. As the week progresses, all eyes will be on the cryptocurrency market to see if it can stabilize or if further volatility will ensue. The interplay between geopolitical events, regulatory developments, and market sentiment will undoubtedly shape the trajectory of these digital assets in the near future. As cryptocurrency continues to attract mainstream attention, investors are increasingly weighing their options in a rapidly evolving market. Among the standout contenders are Solana and XRP, two cryptocurrencies that have carved out significant niches. With a mere $1,000, investors today are faced with a pivotal question: should they invest in XRP or Solana? The decision hinges on understanding the unique strengths and potential pitfalls of each asset. XRP, currently valued at approximately $2.45 with a market capitalization of $245 billion, has gained traction primarily for its efficient transaction processing capabilities. Its appeal largely stems from its utility in international money transfers, particularly among major financial institutions. Banks like Bank of America and JP Morgan Chase have integrated XRP into their payment systems, enhancing its legitimacy and reinforcing a robust demand. The underlying investment thesis for XRP rests on its specialization in replacing traditional money transfer frameworks with a faster, cheaper alternative. This focus could prove advantageous, especially if it gains recognition as part of a U.S. cryptocurrency reserve, which could substantially elevate its price. Conversely, Solana is positioned as a multifaceted platform with a vibrant ecosystem that extends beyond mere currency transactions. Known for its rapid transaction speeds, processing upwards of 65,000 transactions per second, and minimal fees, Solana has become a hotbed for decentralized finance, DeFi applications, non-fungible tokens, NFTs, and even meme coins. Currently trading around $207 with a market cap of $123 billion, Solana's versatility is a significant asset. The platform's proof-of-history blockchain not only makes it environmentally friendly but also adaptable to emerging trends such as potential applications in artificial intelligence (AI). Investors are particularly drawn to Solana's promise of future growth. Its developers actively foster an ecosystem that encourages innovation, making it a more flexible option compared to XRP. While XRP's trajectory may be limited by its focus on a specific market, Solana's broader applicability could drive its valuation significantly higher in the coming years. Recent fluctuations in the cryptocurrency market have prompted a re-evaluation of these assets. Solana recently experienced a decline, dropping from a peak of nearly $250, while XRP remains relatively stable. Despite these challenges, many analysts believe that both cryptocurrencies will appreciate over the next 5 years, albeit for different reasons. However, competition remains fierce, with both coins needing to fend off emerging players eager to capture their market share. Looking ahead, the future of both XRP and Solana is filled with potential, but they must navigate an unpredictable market landscape. Analysts predict that Solana could achieve a market cap of $300 billion by 2025, bolstered by ongoing developments and a dedicated developer community. Yet concerns about the volatility of the broader market and Solana's reliance on DeFi activities may pose risks to its stability. In contrast, XRP's growth may plateau once it saturates its target market of financial institutions, leaving investors to ponder its long-term prospects. Ultimately, while both cryptocurrencies offer compelling reasons to invest, Solana's adaptability and broader application make it a more attractive option for those looking to maximize their investment in an ever-changing digital landscape. As the cryptocurrency sphere continues to evolve, keeping an eye on these two contenders will be crucial for investors aiming to stay ahead of the curve.